Janet Yellen is the Secretary of the Treasury, and historically she's been very anti-Bitcoin and cryptocurrencies. But recently, there may be the tide turning. It seems like Janet Yellen has now come around and is maybe becoming a crypto proponent. It's pretty wild to watch this. Now, as a reminder, here's the background on Janet Yellen. In 2018, as the chair of the Federal Reserve, she said she was not a fan of Bitcoin. Janet Yellen is now the 78th Secretary of the Treasury. And earlier this month, she, along with other government agencies, were tasked by President Biden and his administration to begin the process of creating a regulatory framework for the crypto industry. Now, in a recent interview with Andrew Ross Sorkin of CNBC, Janet Yellen had some very interesting and potentially positive things to say about Bitcoin and cryptocurrencies. Here's the video for you to go ahead and listen directly for yourself.
Russia just said that they would accept Bitcoin as a payment for their energy resources. What does that say to you about where we are in the crypto conversation?
Well, crypto is obviously grown by leaps and bounds, and it's now playing a significant role, not really so much in transactions, right, but in investment decisions of lots of Americans. And the president just issued a couple of weeks ago an executive order tasking us and other agencies with thinking about the regulation of crypto.
I mean, you're less skeptical about it than in previous. I mean, we've been talking about it together for a long time now, and I think you've had a skepticism about crypto technology.
I have a little bit of skepticism because there are, I think, valid concerns around it. Some have to do with financial stability, consumer investor protection, use for illicit transactions and other things. Right. On the other hand, there are benefits from crypto, and we recognize that innovation in the payment system can be a healthy thing. We would like to come out eventually with recommendations that will create a regulatory environment in which healthy innovation
and then finally,
now, to go back to somebody who, as the chair of the Federal Reserve back in 2018, wasn't a fan of Bitcoin, has been pretty anti-crypto for a number of years now. To hear her talking positively about it, to be getting on board with the president's agenda for the United States to be the leader on a global stage for Bitcoin and cryptocurrencies, this is encouraging. Anytime that we can convert somebody like the Treasury Secretary to become more pro-Bitcoin, pro-cryptocurrencies, that's a positive in my mind. And so kudos to Janet Yellen for finally getting new information, starting to change her mind. I would love to see this continue, to see her actually start to put forward ideas, to say that the United States needs to go ahead and be a leader in the Bitcoin world. Maybe even can we have the Treasury Secretary advocate to actually put Bitcoin on our balance sheet? These are all things that might have been wishful thinking a couple of years ago. But after listening to Treasury Secretary Janet Yellen start talking positively about this industry, never say never. Bitcoin is up more than 25% over the last month or so, and it looks like the bulls are in control once again. Bitcoin is positive year to date, and it is outperforming the stock market and many other assets in 2022. But the big story right now is that the bears look exhausted. They just don't have any more Bitcoin to sell into the market. If we go ahead and we take a look at Bitcoin, it's just been grinding higher and higher and higher over the last couple of weeks. If we look to somebody like Kyle Davies over at 3 Arrows Capital, he's got a great point where he says that there are no more sellers left after several waves of bad news. There's been leveraged wipeouts, the macro concerns, the Ukraine war, and much more. So it's natural for Bitcoin to have a strong bid here. He then went on to state that funds and other market participants are sitting on big cash allocations. And as Bitcoin grinds up, he expects many others to chase the market higher. Of course, this is all happening as somebody like Do Kwon from Terra has already stated that they're going to go into the market. They're going to buy $3 billion worth of Bitcoin. Michael Saylor is taking out loans against his Bitcoin collateral to buy more Bitcoin in the hundreds of millions of dollars. So then if we go ahead and we take a look at the exchange balance, how much Bitcoin is actually sitting on these exchanges, you can see that as the price has gone up, the balance on crypto exchanges of Bitcoin has been dropping. That gold line continues to drive deeper and deeper. It's now at about a 3.5-year low. If Bitcoin's not on the exchanges, it can't be sold. And ultimately, this is a sign that the market is becoming more illiquid. When you have an illiquid market and you have more demand coming in, the sellers have nowhere to go. They simply just become holders. Then if we go ahead and we take a look, TD Ameritrade has a market strategist, which had a great point. He stated that as the market gets a little bit more differentiated in terms of the various names or coins that are in there, you start to see them move in a little bit more of an individual basis as investors learn how to parse all the different components. The crypto space will do the same as people become more familiar with it, and there will be a lot more selective around which individual coins they have. Ultimately, that is what we're seeing. The market's maturing. People are becoming more educated about what is Bitcoin and how exactly should it fit into their portfolio. The market is highly illiquid. There's a persistent buyer eating up tons and tons of the remaining supply. And the sellers, they're just exhausted. They don't want to sell anymore. They realize that it's likely Bitcoin's going to go higher here. And all that cash that people have been raising by selling assets over the last few months, it's going to pour right back into the hardest, soundest money in the world. This next couple of weeks should be a lot of fun. Everyone knows that Terra is going out and they're going to buy $3 billion worth of Bitcoin. Do Kwon, one of the founders of the Terra ecosystem, also has aspirations to buy up to $10 billion of Bitcoin over time. They're going to take that Bitcoin and put it in the reserves of their stablecoin, UST. But there's a recent video where Do Kwon was talking about why the hell he's doing this and what are some of the ramifications. Well, listen to this exact part. I found this fascinating in terms of his analysis.
I think if we scale that to $10 billion, so the reason why I want to get to 10 billion is that besides Satoshi, we will be the largest single holder of Bitcoin in the world. Now, then in that case, like within the crypto industry, then the failure of UST is equivalent to the failure of crypto itself.
Now, that's absolutely crazy to think that somebody who went ahead and launched a stablecoin could actually use those reserves and acquire so much Bitcoin that they became the second largest holder of Bitcoin in the world behind the creator, Satoshi Nakamoto. There's a lot of people who don't like what they're doing. There's a lot of people who think it's pretty interesting. Regardless of where you fall on this, you have to be paying attention. Whenever you have a persistent buyer, somebody who's willing to buy up billions of dollars of Bitcoin and they're price insensitive, they're buying $125 million a day or so, you better pay attention because they create a change in the market dynamics. And ultimately, they're one of the main drivers of why the Bitcoin price has been rising over the last couple of weeks. Do Kwon wants to become the second largest holder of Bitcoin in the world. Let's see if he can accomplish it. Yesterday, it was reported that there was a massive $600 million hack in the crypto space. This is absolutely ridiculous. Now, here's what occurred. Ronin, which is a bridge that is connected to the Axie Infinity game, had a security breach, and they tweeted it out. When we started to actually go ahead and take a look at what the hell occurred, we can see that that bridge, which is simply software that lets people convert tokens into tokens that can be used on another network, there was 173,600 Ether and 25.5 million USDC tokens that were extracted in two separate transactions. $600 million is a hell of a lot of money, especially when you look at the fact that somebody in just two simple transactions on a blockchain can take that out of what many people thought was a trusted, secure piece of software. Now, of course, if we go ahead and we take a look, we've got a quote here from the folks over at Elliptic. They said in this case, the issue was that the bridge was highly centralized. The theft came as a result of someone hacking the validator nodes of the Ronin bridge. Funds can be moved out of the bridge if 5 of the 9 validators approve it. The hacker managed to get hold of the private cryptographic keys belonging to 5 of the validators, so that was enough to steal the crypto assets. Now, of course, this is exactly how it works. There wasn't some crazy technical advantage that they got. They simply just got access to the 5 keys that they needed. And if it's not your keys, they're not your coins. And the bad actor, the nefarious person here, they ended up getting control of the keys. If you have control of the keys, then you've got access to the crypto. And that's exactly what they did here. They went ahead and they stole all of those cryptocurrency assets. Now, if we go ahead and we take a look at this hack compared to others, we can see that there's only one other hack, the Poly network, that was bigger than what we saw yesterday. This is more than what we saw in the Mt. Gox or the Wormhole or the KuCoin and many other hacks that have occurred. $600 million is a hell of a lot of money. But this is an overall trend. We're not just seeing really, really big one-off hacks. We're also seeing lots of these occur. It's creating this long-term trend. If we look at this chart here, Chainalysis tweeting out that the hack of the Ronin network is the latest in a series of DeFi thefts. In 2021, $3.2 billion in crypto was stolen from individuals and services. That was 6x the amount that was stolen in 2020. And so when you start to actually look at how significant this is, it reminds everyone, take the security practices seriously. Unfortunately, this occurred. There's a lot of people who got hurt. I'm hoping that the Ronin network can figure out how to go ahead and correct this and that they can recover some of the funds through a various set of different means. Nobody likes that there's criminal activity or there's theft or bad actors in the space. And because it's done on a public blockchain, the odds are increased that actually law enforcement will be able to identify who these people are and hold them accountable for their actions. But at the end of the day, You, as a user, it is your personal responsibility. You have sovereignty of your assets. Make sure that you have your keys so that you have your coins. Not your keys, not your coins. That is one of the greatest lessons of the 21st century. Grayscale is the largest Bitcoin asset manager in the entire world. GBTC is quite popular in the market, but Grayscale is now trying to turn that GBTC product, that Bitcoin Trust, into a spot ETF. There are rumors that it is going to get rejected by the SEC, just like every other Bitcoin spot ETF application to date. Grayscale is now considering potentially suing the SEC if their application is rejected. Now, as a reminder, we first need to think about what is Grayscale? How big and popular is it? They have over 800,000 accounts across 50 states in the United States that actually own that GBTC product, about $30 billion in AUM. But GBTC is trading at a 25% discount to the actual assets inside of the fund. That's not good for investors. If we go ahead and we take a look at the actual assets under management, you can see that there was a massive run-up towards the end of 2020 into 2021. And then after they stopped taking new capital contributions, we have seen GBTC trade alongside the value of Bitcoin as it has fluctuated in the market. If we then go ahead and we look at the premium or the discount, we used to see GBTC trade at a massive, massive premium, and then it grinded down until it eventually became negative 25%, which obviously is hurting the little investor. We've got this quote here from CEO Michael Schunnenstein, in which he states that when asked whether Grayscale would consider the option of an Administrative Procedure Act lawsuit if the SEC rejects its spot Bitcoin application, he said, "I think all options are on the table." Now remember, the SEC is not simply picking on Grayscale. They have rejected application after application for a Bitcoin spot ETF, Fidelity, Valkyrie, Skybridge, NYDIG, and many, many others. But they have approved Bitcoin futures ETF from ProShares, Valkyrie, VanEck, and ultimately that's the question. Are we only going to have Bitcoin futures ETFs, or will we get the Bitcoin spot ETF? Now, this last quote from Michael Schunnenstein is pretty telling, where he states it was really a very exciting announcement that we now have a Bitcoin futures ETF out in the market. But unfortunately, that has forced investors into those Bitcoin futures products because those are the only ones that exist. And so now we should turn and look. The SEC has multiple applications. There's a $30 billion fund that is the most popular Bitcoin fund in the world. They want to convert to a spot ETF. Will the SEC approve that application or not? I don't know. But if they actually go ahead and deny it, just like they have every other application, sounds like Grayscale may have had enough.